I think you'll start moving towards, EM X China, and then investors will need to do completion strategies around that China allocation to the point where China becomes an asset class. And we think it's very similar to what happened with Japan.
This podcast is for advisor use only and not to be distributed to the public. The Wealth Consulting Group is an SEC registered investment advisor, and the opinions voiced and contents in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. All performance referenced is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly. The economic forecasts set forth in this material may not develop as predicted, and there can be no guarantee that strategies promoted will be successful.
Okay, welcome to this episode of The Bull of Wall Street. My name's Talley. I'm the Chief Market Strategist at the Wealth Consulting Group, and I am thankful that I'm joined by my co-host, Jim Worden, our CIO. I know you're busy, Jim, so thanks for hopping on with us.
Thanks for having me.
And this time, our special guest is Jonathan Krane, the CEO of KraneShares. And thanks to you too, John, for joining the show.
Yeah, thanks, Talley, so much for having me. And thank you, Jim, also for having me today.
100%. So John, we've been connected on LinkedIn for a while, but for the benefit of our listeners, and our audience is mainly financial advisors, and we might pick up some of their clients as well. But please tell us about your journey to KraneShares, your vision for the firm, and maybe a bit about what you're doing in the exchange-traded fund space.
Absolutely, Talley. No, thanks. So KraneShares, we established the company in 2013. We're headquartered in New York City. With people around the world now. And, the main thesis of KraneShares when we started in 2013 was to be one of the first asset managers to really focus on China. Okay. And the reason I believed in that was I actually lived in China, in Shanghai for 5 years as an entrepreneur there, actually building out a company in the media entertainment space leading up to the Beijing Olympics. And I had, after graduating from business school here in New York, I got more entrepreneurial and saw great opportunities in China. So moved over there and started a company in the media entertainment space. It really, through those years, this was in the 2004 to kind of 2009, 2010 period, China was going through great growth. There was incredible technology advancement and adoption, and I saw these great growth trends happening there. And when I got back to the States, started talking to a lot of people in the finance community here in New York City, where I live, and saw that sharing my experience in China, how positive it was. Saw that there was most investors were very underallocated China. They still are today, but back then very underallocated. And I had such a positive experience working in China, building up a company there, that I said that that doesn't make sense. Second largest economy in the world, second largest equity market in the world, second largest bond market in the world. One day, I think coming soon, will be the largest economy. That deserves to be a bigger part of global portfolios, okay? And this was also before MSCI had included China in their global indexes. So you had the second largest economy in the world not available in global indexes. So that also kind of didn't make sense to me. So we saw ETFs as a fast-growing product type. And I wanted to, when you start a company, you sort of want to identify some mega trends. And one was ETFs. Okay, this is back in the early 2011, 2012. And the other mega trend, we believed in the opening up of the China financial markets. Okay, and really asset flows around China. That was the premise for the opportunity, and that really comes in three buckets. One is global money going into China. okay, and that's what we've been focused on. Then there's money that will diversify out of China to go globally. And then there's the money in China, okay, where it's the fastest growing asset management and wealth management market in the world right now. So those three buckets we're very fascinated about, and said, look, if you're going to start an asset management company, be able to see where those, be in the middle of asset flows is a good place to start. And if you believe in that long term, that's where you should grow your brand and also business. So that was really the background in my sort of a journey in living in China was really the catalyst to starting KraneShares.
So I'm hearing a lot of China expertise. That's great. And it's really boots on the ground. And the cause resonates with me because of my past life as an equity strategist at Invesco and Oppenheimer funds, where China was really, really important theme for us. But from my past experience, I get it. It's a heterogeneous space, emerging markets. And there's so much market cap in China, but selectivity is crucial in that part of the world. So from what I understand in my readings, John, you similarly view China almost like an asset class, distinct from the emerging markets. So maybe you could explain to us why that distinction is so important, and maybe talk about how kind of a completion strategy around that country and that market could enhance overall EM performance.
Yeah, it's a great statement, and the way you framed it too. So China is still an emerging market, but as the second largest economy in the world, it's quickly moving in an upward direction, and it's become a bigger part of emerging markets. Okay, so we believe that especially with the MSCI inclusion that's happened a few years, 4 or 5 years ago, China as they increase that that inclusion, China will become 35, 40, even 50% of EM. And this is a very similar situation in the 80s where you had Asia, and then Japan became its own asset class. And now today you have Asia ex Japan. I think you'll start moving towards, EM ex China, and then investors will need to do completion strategies around that China allocation to the point where China becomes an asset class. And we think it's very similar to what happened with Japan. That's where, KraneShares, has provided a lot of, education, research, product development around that completion strategy. And look, China companies, mainland Chinese companies, they list in different exchanges. They have their A share, which is mainland China. That's the Shanghai and Shenzhen exchanges. And it's really for the local market there. Yes, global investors have access into those markets, okay? Then you have Hong Kong, okay, where a lot of Chinese companies also list in Hong Kong. Then you have NASDAQ in New York, where mostly it's been a lot of the major technology companies have come and listed, and others, okay? So those 5 exchanges are the key exchanges for mainland Chinese companies to list. KraneShares trades in all those markets every day. And you put portfolios together that are thoughtful, that are slices of China that have a lot of upside potential. And so you have core China, and then you also have thematic China. And we also, we position it that you should actually own both.
So I have and I'm going to bring Jim in on this, but before we pivot away from China, I just wanted to ask you one. So among our kind of top surprises for this year, we've been talking about international China and the U.S. material sector. So it's nice, to your point, John, to see the domestic Chinese equity markets kind of breaking out here. Yeah. But tell me about current market sentiment vis-a-vis the trade tensions between the U.S. and China. Why is this happening as much as we like to see it? And like, how is it possible? And is this really catching investors off guard? Are people still woefully underallocated to that part of the global
Yeah,
equity
so
market?
so global investors are underallocated to China right now. In fact, I would imagine many investors aren't even at benchmark neutral for China. Okay, so just investors getting to benchmark neutral, huge flows will come. Okay,
Mm.
and that usually happens when markets perform very well. You have to make sure you're covered there. So, China also sentiment's a very important thing. So there's the global investors investing in China, but then there's China investing in China. Okay,
Right.
and so it's sentiment's very important, and the China financial markets, the investor markets, still retail driven. Okay, the majority of it. Okay, I think it was numbers could be around 70-75% retail now, 25-30% institutional. But institutions are definitely gaining more market share. In fact, this year there was a trading day where the institutional volume was larger than the retail volume. Okay, so there's a good trend there. Obviously, in the United States, the New York Stock Exchange, I would say, is 85% institutional, the rest retail. So China, as an emerging market, wants to go in that direction. Okay, but sentiment's very important, especially that you still have a retail-driven market. And sentiment was very low in the markets in China over the last few years. The sentiment was low. A lot of it was the pandemic related. Regulation came during the pandemic, and just what things that have happened in China that caused sentiment to drop. Okay, what we've seen in the last year, especially as the markets have picked up, and China this year is one of the best performing asset classes in the world. Most people don't even notice yet, okay, because they're so focused on how the U.S. is doing. But China's outperforming the United States by a lot this year, okay? And I think most investors wouldn't know that right now, okay, until all the numbers come out. But anyhow, sentiment has been picking up in China. The people of China, in the institutions of China, are now shifting into equity markets, okay? Interest rates are very low in China. It's totally different interest rate environment than the United States. Very low interest rates. In fact, the 10-year there, I think, is around 1.5%, like right in that area, okay? So with interest rates low, and then why would you have your money in a savings account when the interest rates are so low? You then have that start going into the markets. Also, previously before the pandemic, there was a lot of real estate investing, retail real estate investing, and a lot of these real estate products. Okay, so real estate was a very important part of the portfolio. That's shifting now. Okay, where real estate as sort of a consumer or retail asset class is now it's less desirable. Okay, and now it's I think. The markets are where things are going to start moving towards, and you see that as part of it. The other interesting aspect in China today is the wealth management industry. Okay, they're quickly moving from kind of a brokerage mentality where it was kind of the 90s in the United States where people were buying stocks and trading them brokerage-wise to more wealth management, financial planning, outcome-oriented type of investment. In fact, target date funds are being introduced in China now. And I think that will also help the buy and hold aspect from the retail or wealth management side. Will start doing more buy and hold into the equity markets.
And what are some efficient ways that you can suggest to retail advisors and wealth managers of accessing those domestic markets?
Yeah, definitely. So you have, I think, look, we're an ETF company, but I believe in ETFs as access products for China to build portfolios around that. Okay. And you have your core China, and that's sort of your A shares. So, we believe in the MSCI, China A share inclusion, and we have a fund. I don't know if I'm allowed to mention funds here, but no. Okay, I won't do that. But
the name, not the ticker.
Yeah,
the name, not the ticker.
Okay, yeah, we have a KraneShares MSCI China A fund that provides that exact inclusion, okay, that MSCI is putting in their global indexes, and that's core China, okay, that's the local companies, large local companies, are the top 50. Then there's also thematic China. Now, you mentioned like this U.S.-China tension, and we had the pandemic, but what did China do over the last 4 or 5 years? Why the rest of the world didn't really notice this, okay, because we were focused on U.S.-China tensions. They very quickly became leaders at key technologies, world leaders. And in the clean tech space, you have electric vehicles, you have battery, you have energy storage, you have solar, okay, you have wind. You also, in the artificial intelligence, AI, you have AI, okay. You also, they're one of the leaders now, biotechnology. In fact, many U.S. companies are going to China to find the next, the next cancer drug. Okay, so incredible. Okay, progress made on upgrading technologies across key industries where they're actually known as the leaders now. So you have companies like Tesla setting up their production plants in Shanghai. I think over 50% of global Tesla cars are produced in China now because they've tapped into the local supply chain there. They even use local battery companies there. They don't even use their own battery in China. It's and the cost efficiencies in China are incredible. So, I think that's a big advantage for China now going forward is in emerging technologies. Okay, and they're becoming a leader at it. And in fact, they need to globalize those, okay? The world needs these technologies in these key areas right now.
Jim, do you want to take us in a different direction?
Yeah. So I'm super fascinated. All that you're saying really resonates with me because we have some positions that are tied to AI and energy, and we don't have a lot of positions like direct exposure in China, but we do through indices and things like that. But I'm just curious, kind of like the path forward, right? Because I feel like it would be in our best interest, our country's best interest, and in China's best interest to just kind of like mend the fence together, work things out. We can benefit from them. They can benefit from us, kind of cool things off around the whole Taiwan, issue there. But where do you see things going? And I hear about companies like BYD that, they can charge the car in 5 minutes. Yeah. And they're working on a battery that doesn't require lithium. So, and then there's the other things they're doing with DeepSeek, and there's some other like AI, they seem to know more about agentic AI use than we do. So how do we work things out and work together? I mean, it feels like a race, a competition, but is there any cooperation?
Yeah. So there has to be engagement. Okay. And there has to be engagement. And if you look at like 30 years ago, America wanted to get into China, 1.4 billion potential consumers, and huge market. So what did we do? Our major companies went into China, invested into production there, created Chinese jobs, transferred technology to China, and we accessed the market. Today, many, I think America, S&P 500 companies, their growth is China, and we're making over $1 trillion in revenue a year from China. Success, okay? Now, China, needs to access the U.S. market, okay?
Sure.
And it has leading technologies that there's demand for those technologies in the U.S. There's also, demand for products in the U.S. So it's now time, and this plays into our administration, bring manufacturing to America, is China should come to the United States, invest into the U.S., set up production, create U.S. jobs, and transfer their technology to the U.S. to benefit this market, but also to allow them to get access to this market. So we did that to China 30 years ago. Now the same should happen here. And you can do it in a win-win situation. Also, you mentioned DeepSeek. It's really interesting. DeepSeek was announced in January this year, and I think it was their Chat GPT moment. Okay?
Yeah.
The whole world noticed, wow, China also has this AI opportunity, and we've never actually rewarded it in the stock market for it. Okay.
Yeah.
And it's really back in November 2022 when ChatGPT was announced. Okay. And it was, what had happened here in the US. All of a sudden, everyone said there's going to be a lot of chips needed. NVIDIA stock has flown up since then.
Yeah.
Microsoft and Meta and all of them that are going to benefit from these big AI announcements. So now that same moment just happened in China. Okay. So then Alibaba made their announcement around AI. Their stock's up 50%. So a lot of these tech companies in China are going to start doing these AI announcements. You're going to see that it's very similar to what happened in the United States with the Magnificent Seven is about to happen in China. And it just shows you, like, they also have their AI initiative, okay? And I think a lot of that was triggered because America didn't want them buying chips, okay? So what did they do? They have to develop it themselves, and they quickly did that. So I think engagement at least gets everyone working together where you find these win-win situations, and you keep there's going to be competition, but then everyone also stays aligned. And my last point is, I think the world quickly discovered after Liberation Day this year how codependent the U.S. and China are on each other. The United States is very dependent on manufacturing from China, both for products coming to our shelves here, but also for technology and components that go in, that are inputs into our manufacturing. Okay, so that supply chain is very critical, and I think when it's codependent like that, it's you have to have more engagement and more focus on that.
So do you think that, like, just the focus on engagement, that can kind of, reduce some of the worry that people have from a national securities? I feel like there's a lot of concern and worry about national security, and they're going to have better technology and they're going to be able to spy on us. But I feel like if we just cooperate and there's engagements both sides.
Yeah. And yeah, Jim, absolutely. And I agree with you. And there's ways to engage where you can still make national security important, but it's more of cooperation. And I think when U.S. and China get along better, and I do believe you'll see a resolution to the tariffs, and there'll be a trade deal happen soon. Okay, I think that will put some stability to the relationship temporarily. Right, you have to keep going, but there'll be a halo effect to that. But I do think if U.S. and China get along more, okay, and signal the world, it actually the markets are more stable. There'll be more peace too. That's important, and it's almost like the concept of G2, U.S. and China. As sort of world leaders there. I think there'll be a more balance out there in the world.
Interesting.
I had a
Super
question.
fascinating. Yeah.
Yeah, I love how we're kind of connecting old economy with new economy themes. But John, we had one of your peers on recently, Jan van Eck, and we talked a bit about China. He's going with India right now, but we did get into China. And I think the inspiration for the conversation was how, and I have relatives in this business, the demand from the power generators and the data centers and AI and stacking this technology and all the cement and concrete and aggregate that's going to be needed, not just for that, but for semiconductor factories. And so this is really the collision of old economy and new economy.
Copper and you're right. All of those things, steel.
Exactly. So I'm just wondering, in China, is there, like this whole kind of infrastructure build out in China, that's now got to be a couple decades old. Yep. So is there an argument for infrastructure renewal? And can we see some of those same trends in China that we're starting to see here in the U.S. And could the materials companies benefit from that?
Definitely. So yeah, you're absolutely right. Look at China. Proved out infrastructure over the last 2 decades, and they have some of the best, especially transportation types of infrastructure, high-speed rail, the roads, the bridges, ports, and now even 5G and all their networks and that whole infrastructure. So they did a good job there, and they're actually exporting that now because they proved it out in China, and they have a whole Belt and Road initiative where they export all that infrastructure, across the world. So that's one side of it. But now the next phase in China is really upgrading technologies, across key industries. Also a big focus on domestic consumption. And look, the savings rate's super high in China. I mean, it's different. That dynamic is not seen in most countries around the world. And in fact, the savings rate, I think, almost doubled even during the pandemic. So you have a lot of money on the sidelines that can be unlocked into the economy, but also into the markets. And so so that's always good where there's money and there's money on the sideline. The other side of it too is China has a lot of dry powder. They didn't do any stimulus during the pandemic. The United States, I think we did $2 or $3 trillion of stimulus. China didn't do anything, so they actually have a lot of money. Like they didn't use up during the pandemic, and you're already seeing in targeted policy, some of they're creating stimulus programs. So I think that will continue also.
Could I follow up on just kind of like we talked about materials, but I'm thinking.
I'm sorry.
No, you're good. I was just thinking about like the energy, and I know you guys have some strategies that are all about environmental themes and carbon capture or carbon credits. Do you feel like, because we've seen a lot of focus on nuclear, and it feels like that's where the trend is. It's clean energy. Do you feel that China's going to start going in that direction too? Because they're still burning coal in some cases.
So definitely, but the air quality in China has improved dramatically. Like it really has. I was there recently, and everyone who visits China now comments on that. It's like it's a whole new China now, and it's because there's been a big push in this renewable clean technology area, and it's actually paying off. So. I think 50% of automobiles sold in China now are electric vehicles. There's those type of numbers, and it's a 30 million car market a year too. Mm-hmm. So they're really a big focus on that, and that's why you have they can charge their cars now. The batteries are you can charge in 5 to 7 minutes because it's scaled, it's stress tested. Mm-hmm. It's like. They need that infrastructure to support all those automobiles. So there's a lot of there's been a lot of developments there and innovation happening. But on the material side, absolutely, there's benefits from in the China side, obviously, and all their production. But I think some of these technologies could be useful here in the United States too. It needs to. Obviously, there's the one big beautiful bill that you have to balance the ownership and how the technology comes in and all that, but it still can be benefiting the United States. So I think you'll see that trend happen now. And in fact, you even heard the president over the weekend said we need more of our workers trained in these key areas like battery and like these other things. I mean, that's only benefiting America going forward. So look, there's a win-win around some of this technology, and it's worth engaging.
Interesting. Seems like that could be a threat to companies like Tesla at some point. Or the other electric companies if they're trying to catch up. So maybe a little bit of disruption.
Sure, but I think it benefits them too because they're smart and they're in China making cars, and if they can get certain technologies to America, maybe that helps too. But you mentioned nuclear. China definitely has a nuclear initiative, probably the largest in the world. nuclear takes time, okay? And I also think there's, we all worry about our electric grids, okay, with all the EV coming, but, mostly people talk about that with AI and all the data centers that have to be built. So you need grid-friendly technologies, okay, that aren't going to, demand on the grid, that actually can be independent. And a lot of that is going to be leading energy storage, tied to solar, tied to renewables, all of that, I think is going to become very important.
Interesting.
So we've got 5 minutes here, guys. John, I want to give you the balance here. We'll give you the final word. Is there something that you'd like to kind of opine on that we haven't touched on and kind of land the plane for us here?
Yeah, it's interesting. We're at KraneShares. We're obviously been very focused on China, and we believe that there's a lot of opportunity there for investors. We also are involved in carbon credits. Okay, we have carbon credit ETFs, and we believe that carbon and the price of carbon are going to be important solutions to the climate issue out there. Okay, and so we're continuing on that, and then emerging technologies. We think global humanoid robots is interesting. Okay, AI continues to be very interesting and a big growth area. So we're also focused on those type of themes, and then alternatives too, and how the future of sort of asset allocation. How you're going to blend, provide, all investors access to alternatives, okay, and blending that. And in fact, we've been very early at using ETFs and actually buying private companies within those ETFs. We think that's interesting, and that's you're going to see more of that too. So just the asset allocation and portfolio construction, we have both public and privates together, we think is another area we're very focused on.
Interesting. I got one follow-up question, if you don't mind, Jonathan. I've been reading and hearing more about the tokenization of both public equities, but then also like private equity and private debt. What do you think about that?
Yeah, I think with the incredible growth of stable coins, okay, and that will continue. You have all this money, tied to tokens that are linked to treasury bonds or U.S. dollar, not making much of a return. And I think if you can offer other type of token offerings, let's say. And that could be tokenized ETF. That could be a tokenized fund. And there's a lot of now liquidity in channels now that could be very interesting as you bring sort of these traditional products like an ETF and you tokenize them. There's new liquidity pools.
Wow, super fascinating.
Yeah, so there's a lot going on out there.
Well, we landed this plane. Now you got to go run, catch another one, John.
Yes, that's right. No, but you guys, this was great, Talley and Jim, and I really, I appreciate the opportunity.
Thank you so much for joining us.
Hers and here's Three's company too. Come and dance on our floor. Take a step that